Ahoy there, traders! So, welcome one, welcome all. How have you been doing? Welcome to our Free Friday open house for swing trading stocks. If you've ever wanted to know about swing trading, then you're in the right place. How are we doing? I'm feeling quite chipper today, and I trust that you are too. Pop a hello in the chat box. You can even pop a hello as well as a hello. You can pop a yoo-hoo, a pip-pip, and a rah-rah, whatever you want. Whatever you want. I'm obviously stalling in the background. I'm pedaling furiously, trying to press the right buttons. We're recording. Maybe we shouldn't have pressed record too soon, but nonetheless. Right, I was looking for my little drawing widget so that I can do this. Draw a little false mustache, put a little crown on my head. There we go. Fabulous. Okay, it's all working. Right, so let's talk about six of the best. I think if you've been to any of these sessions for any length of time, I think you know what's coming. How many rude double entendres can I get in here? With the title of this week's theme. Right, so if you're new, the agenda goes a little like this. We're going to talk about the markets. You've got to excuse my whimsical and flippant way and double entendres and occasional swearing. I quite frankly don't give a damn. So let's talk about six of the best, the patterns, the ones that we look at the most. We're going to look at the markets. We're going to get straight into the charts this week again. We had a lot of fun last week doing it. I think there's a lot of good opportunities as we're coming into that last leg of the final sprint of the year. I'm looking for a big finish. And we'll see what we can find to trade. Best way to get value out of sessions at the session today is to interact. Pop a hello. So in the chat box, again, Randall, Glenn, welcome. Thank you for doing that. Scott, Vito, Bal, hello. Zeke, Fred, hello, Fred. Rodrigo, we've got a nice tight ship today. All the best. So pop a comment, like, share, ask questions, all the good stuff. And if you've got a question, pop it in the comment box. I'll get to it when I see it. If it's relevant, I'll deal with it straight away. And again, if you are brand new, my name's Philip Newton. I am a trader first. I'm a mentor second. I like doing these types of sessions. I am the type of person that likes to stop tourists to see if they want or need directions. Nonetheless, for 28 years now, I've been helping traders become better traders, get profitable swing trading results. I've done a variety of things in those times. I've spent 12 years as a day trader. It's not my idea of a good time now, but nonetheless, I've day traded currencies, Forex futures, and right now I pretty much specialize in stocks and stock options. And the process that I follow is to plug into a proven system called production line trading, which is my way of saying I've got an algorithm, I've got a system, I've got a list of rules, a systematic approach to find, filter, and sort stocks so that I don't really have to think too much. And a phrase that, or a turn of phrase that I came about earlier in the week on a podcast interview I was doing, was that the mistake that most people make, most traders make, and we've all done it, I did it, but would try and every opportunity that we look at, every chart that we see, we try and flick through the Rolodex or the flip cards, the knowledge base that we have, and try and find a way to trade the chart. So we're always looking for a trading opportunity with every chart, every stock, every chart that we look at, instead of coming at it the other way. What's a proven system? And then go and find stocks that fit the setup. And it suddenly becomes a lot quicker. It becomes more systematized. And instead of flapping around, looking at chart after chart after chart, trying to find some way, some different way to trade a chart, we can go, I've got this way of trading. Let's go and find great stocks to do it. So that's what I mean by a production line. It's very akin to jumping out of an airplane and trying to invent a parachute on the way down or some means to fly on the way down. You know, it's too late to do it. So let's build the parachute first and then safely exit the aircraft. Okay, maybe jumping out airplanes wasn't a good metaphor. GPs do it all the time. You have a general practitioner, doctors. They know a little bit of everything, which is great when you've got something and you don't know one. They're basically applying a diagnostics, and they will try and diagnose you. But the reality is they're always going to refer you to a specialist. And that's what we want to be. We want to be a highly paid expert in one or two things. In my case, today's program is all about 6 of the best. I'm not trying to trade 60 different setups, 30 different indicators, 100 different insert your thing. It's just a few things that we're trying to do. And I think when you specialize, and even if it's not the way that I trade, if you just specialize in one thing, I mean, I spent 12 years trading breakouts, range, breakouts, 12 years, just one pattern, essentially what it was doing. Occasionally I'd do some of the other things that we do today. And it was short-term stuff. It was day trading and swing trades over 1 to 3 days. So it wasn't really relevant. Anyway, trades, like this is what we can get to. I think we've foregone. I think everyone knows who I am here today, so I don't really need to go to the great depths of who I am. But nonetheless, if you do want to know, there's the checklist of things that's my resume, whatever you want to do. Here's right there. If you're watching this on the replay, press pause. I do have programs to present to you. I do run a business. Nonetheless, I give as much away as I can within reason. But nonetheless, commercial intent warning, shut up and make me a better trader. There is an invitation to work with me. It's no high pressure. There's no weird shit goes on. If you want to, it's here. If you don't, well, that's up to you. Really is up to you. I run a group accelerator. I do one-on-one mentorship. Again, going into more detail of how we apply production line trading. The 3 elements to what I do, we're going to focus on the visual parts of it again today. But nonetheless, we've got a mechanical scan. This is a systematic process so that we're not flicking through chart after chart after chart. We can ultimately zero in on the best opportunities. And not everyone has the fancy scanning software, which is cool. So we're going to focus on, okay, well, let's look at a few stocks and let's look at the visual confirmation. Ultimately, this just involves the 6 ways that I like to make money. And I'm not worrying about the names of patterns. I'm not worrying about the Dow theory, the Gann theory, the Elliott wave theory, all the other theories and nonsense patterns. I tried to itemize all the patterns that I had once, and I got to 34 differently named patterns, rules, and conditions. And the reality is they were all, you could blend them all into a consolidation. So there's 34 different consolidation patterns that I could trade. It's a headache trying to remember everything all day, every time. So let's just make it easy for ourselves. So that's what we're going to focus on, the visual confirmation elements. We're going to look at 6 of the best. So let's get right into it. Where's my charts? There we go. Let's start off with the markets. What are we looking for? Well, one of the patterns that we're looking for while we're at it is a trend. We want to buy the dip. So when we can recognize the trend, we can start to say, when does that trend fail? And this is what we've been speaking about the last few weeks. On the September retracements, it broke the pattern. It broke the theme that it has. I'm not saying it's not in an uptrend anymore. It's just resting. It's transitioning into this consolidation. Now, we've got 3, multiple touch points of the lows. We were okay with the boundary low, but now we're back up to this high. We're questioning, are we going to see new all-time highs and it romp away? Or are we going to see price kick back a little and come back into this range? Because one of the things that certainly we've been speculating on the last few weeks is the S&P especially transitioning into or from a very clear, very strong, very prominent uptrend into a resting phase, a consolidation. And that, for the moment, appears to be what's going on. So until something new happens, we've got to presume the same thing's going to continue. And while I'm not ready to be bearish, because again, I've not got multiple touch points, an example would be on the Russell, where it's very clear we've got multiple touch points of the lows, multiple touch points of the highs. It's very easy for us to say price is in a range and has been for most of this year. The Dow is already starting to do that sideways dance and has been for a while as well. A little bit of a different situation. I think it's fairly clear that we've got more of a rising highs here, but price is definitely contained in this sideways mode. So we could see a new high and we can still call it a consolidation. But nonetheless, that's what I'm speculating on with the S&P. I think this is it. We may see a little bit of a nudge high. It might just take out new highs, but it wouldn't surprise me if we just saw price sell off. Is it going to be a hard and fast sell off? I don't think so. I think it may just come back to somewhere in the midpoints. It may be a brief midpoint, but I am bullish into the end of the year, just from a seasonal and cyclical viewpoint. So I think the only one we didn't look at was the Nasdaq. The Nasdaq has retained its rising channel, which is quite nice to see. Again, just stalling at this, again, not quite making a new high. So this could ultimately get up to 16,000. Is that going to be the year-end rally that we're expecting to see? It certainly could get there and still be contained within this rising channel. Or, again, looking back to a prior point on the chart where it didn't quite get to the upper boundary, it did make a new high, is back here where it just nudged the new high, didn't quite get up to this boundary line that we've got marked off before coming back to the lower channel or the channel low. So we could see something similar to that. Again, I'm just looking to history to give me a clue as to, will we get to 16,000? Will we go to the upper boundary? Or will it be something similar that happens here? So ultimately, I am bullish, but, in the next week, 10 days maybe, it's possible that we're going to see the markets just sell off, just correct. Again, I don't think it's going to be anything weird or crazy, but I would be anticipating a little bit of a sideways movement at the very least before the next directional movement. Again, going into the end of the year, I am bullish ultimately. So with that said, that's the broad markets. Nothing really surprising, nothing really out of context from what we've been discussing the last few weeks. Been certainly following this along, and it's doing exactly what we anticipated. The only uncertainty came with, is price going to push lower? That was the only uncertainty. But obviously, as price turns around, it develops our lovely little V-shaped patterns back above the 50-period moving average, and we've got to be bullish as per our strategy and analysis process. So let's think about 6 of the best, as we've been talking about. So we've already gone through 2 of them, actually. And to be fair, 6 of the best. Let me just put the chart. I'm just going to take the chart away. There we go. So the chart is intentionally blank. So there's 3 ways that the markets can go. They can go up, they can go sideways, and they can go down. So contrary to popular opinion, it's not a simple case of up or down, which would make it a 50-50 coin toss type of scenario. And this is the big misconception with trading. It is not 50-50 because price can remain unchanged. The way that we normally evaluate this in a sensible way is that price can oscillate and go sideways. So there's actually 3 possible directions: up, down, and essentially still unchanged, or oscillating is probably a more realistic thing. So this makes it a 33% or 33.33 recurring probability that we'll be able to get the direction right. So as soon as we start thinking in that context, there's 3 things that can happen instead of 2. It's not a binary up or down scenario. We can start to create and craft an edge, for want of a better description. We can start thinking about the patterns, the money-making blueprints, because they're all around the context of this up, sideways, and down philosophy. So the first one is buy the dip, baby. We're looking for price to rally, retrace. We're looking for it to rally. And what we want is to capture the retracement part. This is what buy the dip is for me. So we want to try and identify at what point, or what we consider to be a suitable buyable dip. And one of the ways that I do that is I use moving averages to help me with a framework. Again, the tool doesn't necessarily matter. If we were talking about the same blueprint 4 years ago, my preferred tool was actually Bollinger Bands. The tool doesn't matter. All we're trying to do is, how do we use the tools to identify these buyable dips? So in this case, we can see price rally away from a, let's say, 50-period moving average. As it comes back to that 50-period moving average, I can call that my condition to for a buyable dip? Is it dipping in the context of an uptrend? And in this case, also, how am I going to quantify and qualify what a buyable dip is? And that means that I can ignore the rally. I can ignore any downward movements that is not meeting that threshold of, in this example, the 50-period moving average. And obviously it can go lower. We also use the 20. We also use the 200 period just for reference. And we've spoken about the specific rules of that buyable dip many times on previous recordings. So if you want to go back and see some of the YouTube or the past episodes, then you can go and look at that in more detail. And we spent whole sessions on the 4 rules that we use to define a trend and a dip in the context of a trend. So the next thing is, I'll do down because down's easy. Down is just the opposite. So we've got selling the rally in a downtrend, and it's just the opposite. You know, we want to sell the rally in a downtrend. So what we're aiming for is to find a sellable rally. And if you weren't already aware, and I always forget this, not everyone is familiar with the fact that we can profit from downward movements in the markets. It's called selling short. We can buy puts, we can sell calls, and ultimately we can do all of these things to profit from a downward movement in the markets. And again, it's just the opposite to buying the dip, and it's selling the rally. And we can just flip the rules over and scan for a dip in an uptrend and a rally in a downtrend. And some of the eagle-eyed among you may know that we can do a lot of the work in this watch list on the left. So over on the left here, that's what these little red and blue boxes are. They're telling me, without even looking at the chart, the mechanical scan. This box here on the left, if I just highlight it, actually, this column here that I've highlighted with now the white background, that's telling me what the ultimate trend is. And then I can look and see at a glance where price is in the context of its current trend. So for example, we've got a Zoom. If I'm just going to underline it, there we go. So just above the white area that I've highlighted, we've got Zoom, row number 32. If you're on Zoom and you're watching live, you can pinch the screen and zoom in and out if you're on a small mobile or an iPad. If you're on the replay, tough, you'll have to squint at the screen, but nonetheless you can pinch and zoom in. Conveniently, we're looking at Zoom. So Zoom here is telling me that we're in a bearish trend direction, and we're in prices below the 20. It's below the 200, it's below the 50, but it's above the 20. So if we were to flip the chart on, we'd be expecting to see a downtrend, but specifically it would be rallying to just above the 20-period moving average. And that's what it's telling me over here. So I can scan very quickly and see from a mechanical point of view, is this one of my 6 money making blueprints? So Zoom looks like a rally and a downtrend. Cool. That's interesting to know. So if I'm looking for a bearish trade setup, I'm looking to sell the rally and downtrend. So this would be the money making blueprint that we're looking for. Now, the last one is ranging, consolidating, oscillating. It's basically when prices go sideways. Let me just tidy the chart up. Again, we've got the up, we've got the down, we've got the sideways. So it's when prices oscillating and ranging. And we've got a couple of ways that we can define the range, but we need 1, 2, 3 touch points, 1, 2, 3 touch points. And we can say that that is the boundary line. Now, why 3? 3 is important. It's a magic number, but any fool can connect 2 points, 2 reference points together. There's nothing smart or clever about connecting 2 dots and calling it a trend. There is nothing clever or creative about that whatsoever. And that's generally what all these trend line traders use, and they wonder why trend lines don't work. If you are going to use sloping trend lines, we're looking for 3 touch points. I like to use horizontal wherever possible. There's a few exceptions. When it's obvious is the exception that we can use a sloping trend line, but we're looking for 3 touch points because this is where we start to say in this case, the trend, the theme is very clearly sideways. We have a barrier, a boundary point. We can call it support, we can call it resistance. I don't really care what you call it, but it's a barrier that is defining the range. And the 3 touch points is a usual safe, and it's the earliest point that we can say price is range bound. Another mechanical way to help, we can use the moving averages, a trending tool, to help us define a consolidation. So what we might have is the moving averages, and we've got a longer, say a 20 and a 50 period, but as the moving averages crosses down once, goes back above twice, and maybe goes back below a third time, there's those three conditions again. We can use the moving averages crossing over in a relatively close time period, and also a vertical price period. So horizontally and vertically, that happens in a relatively short space of time. So the point of mentioning this is that we can rule define a consolidation, and it means that we can scan for it. Surprise, surprise. Visually, we can also inspect it, because just because we're expecting to see one thing doesn't mean that we're actually going to see it. So coming back to Zoom, just because we're expecting to see a rally in a downtrend, does it really mean that price is rallying in a downtrend? The mechanical indicators are saying one thing, but it's only when we go to, let's do it. It's only when we go to the visual inspection that we can say, actually, what I was expecting to see is actually happening. So now that we're looking at this chart, it's very clear that it's in a downtrend, and we've got multiple rallies in the context of a downtrend. Now, here's the 20-period moving average. Let me just take one of these lines off, just so, because we're not using my strong trending tool. So we're just using the classic trend setups, but we can see that we've got the rally in a downtrend that we're just talking about, and prices above that 20-period moving average. So when it comes back below, then I can consider a very quick sell the rally in a downtrend. Now, if it comes back up to the 50, goes above, goes back below, I can call that my line in the sand. I can redefine where I'd like to participate in the trend. So just because price is above a period moving average, it's not an automatic sell. I'm going to wait for it to start traveling lower again, and I can start selling the rally in a downtrend. So what we're expecting to see was a downtrend. Visually, we see it. It is going down. So that's what we're going to do right now. We're going to go through several stocks, several opportunities. Now that you know what I'm looking for, it takes longer to explain than to do, as always. So I've got a list of stocks here. These are some of my better stocks. And let's see if we can go and find something worth trading. Now, last week we did the top 30. Again, I can scan and look down and have an expectation, but just because it doesn't take that long. My universe of stocks, my entire universe, is less than 100 stocks, 100 perfect stocks that I consider to be the best candidates for swing trading opportunities. Again, I've outlined the reasons, the hows, and the whys in the past, so I won't belabor that point right now. But just so that we've got it on the bottom of the chart, pattern number one is to buy the dip in an uptrend. Right, let me try and make this nice and visual. So we've got number one, we've got buy the dip in an uptrend. That's what we're looking for. We're looking to buy the dip in an uptrend. That's what we're looking for. Number two is just the opposite. We want to sell the rally in a downtrend. Trying to remember. There we go. And then the other one, the last one, the third one, is when price is range bound. So bear with me, folks. I barely passed my art examinations. I'm trying to remember which buttons to press to get the right colors. Maybe doing it the color scheme was not such a great idea after all. Benefits of hindsight are always great. So we've got rally, we've got range. I've done it the wrong way around already. I've done it the wrong way around. I'm sure we get the idea. There we go. Let's try it again. Let's do. Let's do that. Let's do that. Let's do that. Let's do that. Great. So that's what we're looking for. Range. Are we in a range? So 1, 2, 3. So that's what we're going to do. And I've got this little visual cue so that when we flick through our charts, we can start saying things like, what is it doing? What is it? Is it 1, 2, or 3? That's all I'm looking for. If price is uptrend, great. If price is in a downtrend, sorry, I forgot to go through the what we're looking for in a range. If it's 3, I'm looking to buy range lows, sell range highs, or I can buy the break of range highs, or I can sell the break of range lows. So that's what we're looking for. There's 6 patterns. So number 1, buy the dip. Number 2, sell the rally. Number 3, recognize it's in a range. And then we can say, well, is it in the range or is it outside the range? So right now, here's a good example. Right now, we've got ACH. This is the Aluminum Corp of China. So we had that consolidation, 1, 2, 3 consolidations. Just put a big square. Don't worry about what it's called. Just mark it off. So there's our breakouts. So hit that breakouts, pullback. So there's the breakout trade. Now we can revert back to buying the dip, the classic trend. And now it's gone from range number 3 to breakouts to dip in an uptrend number 1. So we're now looking at number 1. So if it goes back above, and we said this last week, if it goes back above about $18.80, somewhere where my crosshairs are, if it goes back above there, I'm going to be really interested. So now we've got a clear, like, this is what I'm looking for, 1, 2, or 3. Is this stock doing one of those 3 things? Now, let me just pause there. Give me a yoo-hoo, pop a comment. Let me know if this is resonating. Does this make sense, folks? I mean, this is as simple as it gets. Is it number 1? Is it number 2? Is it number 3? That's it, 1, 2, or 3. And then number 3 is we've actually got 4 things that we can do. Trade the range or trade the breakout of either side of that range. Again, I know this is like pretty simple, folks, but 28 years later, we don't need to complicate it. We don't need to know that if price is in a consolidation, we don't need to know that it is a wedge, a flag, a pattern, a head and shoulders, which is another form of consolidation. Most people associate it with a reversal. There's so many different named patterns. We only know the name of the pattern after the pattern has completed. And certainly when I was reading textbooks, and I shall regale you with that sunny Sunday morning back in my Blockbuster video days, in the 90s, my first part-time job when I was 18 or 18, I think it was. I was reading Jack Schwager on futures for about the 3rd time, which if you've not read it, it's a 1,000-page book of here's what this pattern looks like. Here's what this pattern looks like. And it's after the, and it's, don't get me wrong, it's a great book. But it's after the fact. Here's a perfect example of what the author is describing. It's a textbook example. Well, we know with that phrase, it's a textbook example. It's a perfect illustration of what the author is describing. But at no point in any of the textbooks do they tell you how to find them before the move happens, before the breakout happens, before the reversal happens. This is a trend. Great. Trade the trend. Well, how the fuck do you do that? I'm telling you, this is it. Buy the dip, wait for retracements, sell the rally, recognize the trend, look for price to be above the 50-period moving average, and then trade it as it goes back below the 20 or the 50-period moving average. In the range, we want to buy the range low, sell the range high, buy the first pullback after a breakout, either through the high or the low. That's it. When you recognize the simplicity of this, you can start making some. I've made a career of this. Again, just the number 3. Come back to this. Number 3, the range. I spent 12 years just trading breakouts. 12 years just doing that. Nothing else. Nothing else but trade one pattern. There's 6 here. Pick one. Pick your favorite one. Right now, it's really rude not to be trading number 1, which is buy the dip. The markets only go up, don't you know? But nonetheless, right, let's quickly do this. We're on the clock. 2:30, the market, 2:30 my local time, 9:30. We're going to go through these quite fast. Is it 1, 2, or 3? That's it. 1, 2, 3. Well, good question, Glenn. Good question. I'll tell you what, I'll slow down. I'll go through some examples to explain, and then we can quickly rattle them off. So the moving averages are 200, 50, and 20. So 200, 50, and 20. So what we're looking for is right now, what is price doing? Firstly, is it 1, 2, or 3? Is it trending up? Is it trending down? Or is it ranging? It's perfect, Randall. It's going up. Perfect. It is statement in a trend. No one is, everyone's popping ones in the box. Perfect. No one is in dispute about this being an uptrend. And listen to the way that I'm wording it. I'm not saying it looks like, or it's kind of this, or it's maybe that. I'm making a statement because I know exactly what I'm looking for. Number one, it is in a trend. Great. Now I know how to profit from it. I'm looking for a downward movement, which we've qualified as below the 20. Let me just put my crosshairs on. Below the 20 or below the 50. So right now, price is statements below the 50. So as price travels back above the 50 period moving average, I can start being a buyer above the 50 period moving average. Now, we could have done that on the 20. So on the way down here, we can see just by my crosshairs, price went below the 20. It never went back above that point. Now, as the moving average moves down, I'm not trailing my entry, just to be clear. I'm using that point. When price goes below the 20, it needs to go back above, well, but conveniently, it's also $20. It needs to go above $20. I'm going to be a buyer above $20. That's my line in the sand, as you've heard me say in the past. But now price has come back below the 50, I can wait for it to go back above. And I could have done it there, is one thing. But if we're looking for a trade right now, it needs to go back above $18.30. That's my line in the sand. If that doesn't happen, I've not got in too soon. I'm not getting in too late. It's the Goldilocks entry. I'm in exactly where I should be. And most importantly, it's a rule that you can clinically apply today, tomorrow, next week, next month, next year. And in 28 years, you can join me in looking back on a wonderful career of making money from the markets. So does that help, Glenn? I'm going to go slowly through a few examples. And let me use Netflix, NFLX. Netflix is a good example of a range and a breakout. So you can see in a good example, and you can see several. Again, we've been talking about this all year. Multiple crosses. Let me just scroll back. Multiple crosses in the average price. 1, 2, 3. So right there, there's your 3 crosses. Let me just change the color. Let me make it a bit thicker so everyone can see it clearly. Right there is the first and earliest point that you can say, you know what, I've got 1, 2, 3 crosses in the average price. If you weren't sure about the visually inspecting, then let me just wind it back so you can. So in real time, you would be looking at that. Now, it's very clear that you've got multiple touches of the lows here. 1, 2, 3. 1, 2, 3. But if you weren't sure if you'd missed it, overlooked it, because you're still new to looking at the charts, and maybe you just don't see it yet, and that's okay. You've got a mechanical rule. 1, 2, 3 crosses in average price. You can step back and say, and my apologies, this is the 20 crossing the 50. So thank you for the question. 20 crossing the 50 once, twice, 3 times. At that point, I can start to sit back and say, well, maybe price isn't number 1 anymore. Because prior to that, it was trending. It was buy the dip, baby, BTFD. 3 crossing the average price. Maybe it's now number 3. Well, not maybe. It is 1, 2, 3 crossing the average price. Let's just draw a big box around us. If it stays in there, and that's what it did all year. So I can buy range lows, sell range highs, buy the break of range highs, and sell the break of range lows. And it's just been pretty much pinging back and forth all year, all year, all year, all year, all year. And then we get another breakout attempt eventually. So there's the breakout. So something new. So not only has it got to break out, now I'm still not buying here. Still not buying here. Just like over here where the cursor is. Still just like over here where the cursor is. Still not buying there just because price is above the range. I'm going to trade the first pullback after the breakout, just like we see in the picture. The first pullback after the breakout. So it's broken. Something new is happening. The first bar, the first correction. Oh, there's our retracements. We're back to buy the dip, but this is what a pullback after the breakout is. Now, my first entry is going to be as price goes above the high, because maybe there's only a teeny tiny pause, but I've got a retracement in the context of a breakout. Number 3, trade the breakout, the first pullback after the breakout. And guess what this is? The first pullback after the breakout. Now we're back to trading the trend. BTFD, buy the dip. So it's gone from number 3, trend, ranging, multiple crosses, stays in the buy range lows, sell range highs, buy range lows, sell range highs. We've been doing that all year. We've been following Netflix as one of our trades that we've been tracking in these open sessions, buy the dip. And then we've got breakouts, buy the breakouts. The first pullback after the breakouts. We're back to trading the trend. We're back to number one. Trade the trend, buy the dip, baby. We've just had a new entry, pre-news. I posted this out to everyone who's on my email list. Everyone who's in my Slack community. The day before this took off, we were buying Netflix. It's going up. Surprise, surprise. What's it doing? This is the river of money that we keep talking about. Now, they don't all work out. I've got to say, they don't all work out. Sometimes they kick me in the arse. But we've got a systematic approach to find, filter, and sort the best opportunities. And based on what we see at the time, here's a good example. Allstate, 1, 2, 3 crosses in the average price, a brand new consolidation. Number 3, it's gone from trend, number 1, to ranging, number 3. Great. I can ignore the moving averages now. Other than that, the only thing they're telling me is that they're flip-flopping and price is ranging. We've confirmed that. I don't care if it's a descending triangle, a hammer, a double top, a triple top. None of that matters. I don't care what the textbook calls this. Because the thing that textbooks don't tell you is price action can evolve and mutate into a different named pattern. This double top might turn into a descending triangle. It may evolve into some fancy wolf wave pattern. It may turn into something else with a different name. And you're wasting time, effort, and energy trying to figure, I'm doing the bunny fingers behind the camera, which isn't on, bunny fingers, trying to figure out what the name of it is so that you can confidently say it is this pattern. And it evolves. We'll only know what it's called afterwards. So don't waste any time or effort calling it by a maybe it looks like this. I want to take maybes. It looks like it's possibly this. Maybe we're in a wave 5. Maybe it's descending triangle. I want to take maybe out of my decision-making process. It is in a range, a consolidation, a contraction in price. Call it whatever you want, but don't worry about naming it. Buy range lows. I don't know if this is going to work out. Here's a trade that I've placed just a few days ago. Again, I don't know if it's going to work out, but I've got to be bullish at range lows. This is number 3. It is in a range. Buy range lows, one of the 6 money-making blueprints that I teach all my traders. Throw a question open. Where could it get to? The whole premise of technical analysis works on the basis that until something new happens, whatever the name of the pattern is, despite the fact that I was bashing them a moment ago, whatever the name of the pattern is, until something new happens, the same thing has got to continue. That is the very definition of a trend, whether it's going up, down, or sideways. It is in a range. Great. That's a type of trend. Oscillating. That's got to continue until something new develops. Something new being a breakout in this case, like we saw on Netflix. So I've got to be a buyer at the range low, and I've got to target the range high. That's my trade. Now you know. Tune in next week for the next exciting adventure of Did It Work? No benefit of hindsight. Just on that, well, actually, there we go. So another one, we talked about this last week. I've had multiple trades on this. Just by happy chance, this one was the next on the list. And same trade, buy range lows, targeting the range highs. Maybe we'll be cashing out a little something for the weekend. AMD, what is it? Trend. It's been in a consolidation. We've traded the breakouts once, twice, 3 times a lady. This is a trade. This was not working for me initially. You can see there. Yeah, not working. But guess what? Because I trade stock options and I've managed my risk on the entry, I don't really need to worry a great deal about the timing or mistiming. I took the first entry that was valid for me as it went back above the 20-period moving average. Cool. It came down to the 50. It's okay. Not missing out. Peter, the green at the top of the screen I can't on this version of TradeStation. It's not that I don't want to. It doesn't matter. AMD. Look down the list on the left here. You can pinch your screen on if you're on a mobile. If you're on desktop, you can use the zoom function. If you're on an iPad, you can pinch the screen and zoom in and out. I am calling out all the stocks. There will be a replay. It's recorded, so you can pause and take notes. Unfortunately, I can't change the color on this platform. You should be able to, but you can't. On a different version, you can. So unfortunately, Axion. In fact, I think, let me try and do one better for you, Peter. Just bear with me. Bear with me. I think I can put, I normally hate this, but I can put, where is it? The watermark. Can I put the watermark? And then it should be easier to see which is the stock. I can't damn well. Where? Oh, there we go. Enable watermark. That should be easier to see. Does that help? Again, I can't change the color of it, unfortunately. There we go. So that. So let me go back. Excuse me. So you've had all states. We've had AMAT. Again, you can see the trade. We called this out in real time a few weeks ago. Guess what? If you're on my email list, if you're in my Slack community, I give what I'm trading away for free, and I have done for many years now. Thank you, Peter. I am the man. Randall's in all those trades. Thank you. Well done. So AMD. So just catching up so you can see the chart. So Axon Enterprises. Now, what do you think of this? Now, here's where you can start to say things like, well, I've got multiple crosses in the average price. It's not, notice the way I'm saying, it kind of looks like it might be trending, but I can also see the argument for it's kind of trend ranging. You know what? Coulda, woulda, shoulda. Let's just fucking move on. We don't have to find a way to, and that's the trap that people fall into, new traders especially. They're going to look at a chart and go, how do I trade this? Don't worry about how to trade it. Just recognize that, you know what, it's a little bit sloppy, it's a little bit messy, it might be trending, it might be ranging. Notice the wording. We've got multiple crosses in our average price, looking at the charts, multiple crosses at relatively similar level. It looks like it got caught up in the pumpy dumpy thing earlier in the year with the meme nonsense. I'm not going to worry about it. I think personally there's better looking charts, both trending and ranging. Let's look at a good example. Let's go back to Netflix, NFLX. This is your model for what a consolidation looks like. So this is the best thing that you will see for a well-defined range, Netflix. So that's your benchmark for this is a great consolidation. That's what you're looking for. That's the benchmark. Until you find something better, or something that looks better, then that's great. It's also, as it breaks out, a good example of a breakout. It's a good example of a trend. It's got all the characteristics of the things that we want, that we're going to say, this is quality control. Again, remember, we're running a trading production line. Quality control. Axon doesn't look great. Doesn't look great. So let's not worry about it. Just going back to Netflix, there's a question about from Glenn. What does the NFLX 40, 70, 61? So it's just a horizontal line that I was looking at. So it was just the original range low back there. But as price was evolving, I was just doing a little bit of fine tuning with where the boundary low was. That's all it was, the original range low. Right, let's go through. I think everyone gets it. 15, it takes longer to explain than to do. We're going to go through the last quickly. Number one, it's trending, buy the dip. B core, guess what? It's in a range. It's in the middle of the range. Leave it alone. BYND, it has been great. It's been trending right now. It looks like it's ranging. You know, I think what I'm going to do, I'm going to update my analysis. I've not had a chance to. Again, just looking, containing where price has gone sideways. You notice I'm not really caring. I'm just going, it's about there. It's about there. This one's not obvious because we've not got multiple touch points, but we do have, you know, multiple cross in the average prices. They're all pinched together, which doesn't look great. It's just a reminder to say, you know what, leave it alone. I've had some trades on this, you know, they've not been great. Wait for a breakout is what I'm going to do here. Buy the dip. Yeah, to be fair, you could do it. Glenn, you could do it. Depends on how you read it. CAR. CAR, Avis Budgets. We've gone from sideways transition. You can see where I've drawn it. You can see we've had multiple entries, and you can see where I bailed out a little bit too early. It has been on a great tear. It's not giving me an opportunity to rejoin, but there's no hesitation. It's now firmly in number one, buy the dip. I'm waiting for a buyable dip. You've got to be okay sometimes with letting the move go, letting the move go. I got out and very happily got out at 120, having sat through all this sideways. You can see my entry, but nonetheless, it did what I wanted it to do. You don't know that this is going to happen. Holding and hoping for this to happen is a fool's errand. Hoping that it goes from 120 to 170, it doesn't happen all the time. It happens enough to fool people into thinking it can happen again soon. But the reality is these types of exponential movements were being really spoiled at the moment because of weird and freaky market conditions. So for me personally, I'm waiting for my Bible dip to look for something new to happen. Let's take out Caterpillar. We've got potential for a new bearish trend, sell the rally. CENX, a little bit sloppy, a little bit messy. In fact, you could go back to that. You could start to say it's starting to shape up. I drew my consolidation here. Technically, we've got a breakout, pullback. There's your Bible dip. It's CPRI. It's in a range, in the middle of the range. Let's ignore it. CVX. This is Chevron. Again, now we're looking at it. I think we've got multiple crosses in my average price. This could be a good candidate for a breakout. Again, multiple crosses, nice visual range. Nothing that I need to worry about today, but nonetheless, as it moves higher, we could be looking at a trade. DDD, I've been trading this a little bit differently, so it is marked off, multiple profitable trades, but it is technically in a range. From what I'm teaching you here today, we would leave it alone. DQ, we can see that price is in a downward channel. Sell the rally at range high. A downward channel or a rising channel, it's another consolidation. A lot of people will either call it a trend or a range intersposably. This is one of those patterns. It's doing two things at the same time. Apple's another good example. Apple's another good example of a rising channel. You know, you've got this, the Nasdaq generally is rising. So you've got this rising channel. Don't confuse it with a trend. It's doing both trending and ranging behavior. I default to calling it a range when you see a rising channel. And you can see what I mean there. You've got this rising channel. EA, horizontal range. Guess what we're going to do on EA? Guess what we're going to do on EA? Buy range lows. Easy peasy, lemon squeezy. Can you see how it becomes easier? I'm not saying that trading's easy. There is a learning curve. I've never tried to blow wind in anyone's sails that there isn't. But when you know what you're looking for and you're applying quality control, is it one of the 6 patterns? Yes. If no, go and look at something else. If not sure, go and look at something else. Can you see that it becomes easier? Can you see that it becomes easier when we're trying to fit the stock to the strategy rather than the mistake that most traders make, which is find a way, any random thing that I read in the last few days or read in a book 6 years ago, and then try and fit a square peg in a round hole and apply it to this chart so that I can place a trade today. That's the wrong way of doing it. That's the old way. The better way, the way that people who are making money doing this for any length of time, is they have and this is what it means. I'm looking for stocks that meet my trade criteria. Is it this one? Yes or no? Is it this one? Yes or no? Is it? Yeah, great. Trending, buy the dip. It's in a rally mode. I'm waiting for it to be in a retracement below the 20, below the 50. I've got a defined criteria for what I'm looking for in a buyable dip. EXP, guess what? It's in a range. You can see what we've been doing. Buy range lows. I've got to target the range highs. EXP, this is Eagle Materials. FedEx. What's it doing? Pop a comment in the chat box. What's it doing? FedEx, FDX. What's it doing? Number 2. Perfect, yeah. You could call it number 2 or number 3 in fairness. I think it would be okay. Technically, you've got a classic trend, average price moving down. We'd be looking to sell the rally. So you could call it number 2. I would call it a breakout just because we've seen it, do the multiple crossover. I've already marked it off. And I think it's fair to say this is where having an overlap between selling the break of range lows. So right now, where's price? Below the range. Sell the rally. sell the first pullback after the breakout. So this is the first pullback after the breakout. It also meets the criteria for number 2. It's trending down, sell the rally. So if you see it as number 2, that's okay. If you see it number 3, one of the breakout setups, that's okay as well. What you'll find is when it's crystal clear, that overlap's okay. The most important thing is that you recognize a phase that's obvious to you and based on your skill level. Randall's asking, can you sell calls? Yes. So ways that you would profit from this, you could sell calls, you could buy puts, you could short stock. They're am I missing anything? They're the 3 essential ways that you can do it. Sell calls, buy puts, short stock. And a combination of all of those is how you can profit from it. You could do spreads if you wanted to have it risk defined, but ultimately that's what we're looking at. Excellent. Well done, everyone. FMC. Let me just get out the way of the squiggles. Consolidation, breakout, sell the rally after a breakout. Maybe you can see my markings on the chart there. Number 3, same as FedEx, just a little bit further along the road. Goldman's, Goldman's. I sent this out to all my email subscribers. If you're in our Slack group, you will have had this in real time. Guess what it's doing? It's going up. Number 1, please. Buy the dip. Goes back above the 50-period moving average. Looking for it to go higher. What a surprise. Why that? Because it's trending. That's what we're looking for. Easy peasy. Is everyone getting this? I mean, there's lots of stocks. I mean, you can pick the stock that makes the most sense. Let's just spend the last few minutes going through the last half dozen quite quickly. HD, breakout, pullback, easy peasy. It gets easier when you know what you're looking for. We're not trying to fit a square peg into a round hole. We're trying to look for a square peg and a square hole because we know what we're looking for. Will this fit? Is this in my strategy? Is this something? Oh, that's a little bit of a mess, but there we go. I have to update my charts. Humana, it's in a range. Buy range lows, sell range highs. Guess where we are? We're coming up to range highs. What do you think we should do next? Here's a question. What do you think we should do next? It's in a range. It's in a messy range, but we're back to range highs. Until something new happens, the same thing's going to continue. I've got to make that absolutely near. Yeah. My primary scenario is I'll be looking to be a seller. It's not an automatic sell. But my primary scenario is when it gets here, I'm going to look for some of these V-shaped patterns that we see, maybe a big sign of exhaustion like we see there, but I'm looking for a reversal. And this is, again, you can see the V-shapes there. I'm looking for one of those V-shapes at the range high. And then if price goes below the apex, or if we were at the range low above the apex, then I can get in my bearish trade. So that's my primary scenario. Now, the great thing with a range and a consolidation is we've also got the breakout. Again, remember, so if we see a breakout and then a pullback, I can resume looking for trending style setups. So I get 2 scenarios with a range. I initially will be looking to sell the range high. That's what I'll be looking for. If that happens, that's going to be awesome. I've ended up drawing on the charts. I think we get the idea with what we're looking for. Let's rattle through the last few. IGT, buy the dip. What a surprise. Illumina, a little bit messy, a little bit range bound. I don't think it's well defined, but let's call it multiple crosses in the average price. Let's call it a consolidation, and let's not worry about what the average prices are doing. That looks good to me. Lows. We've been trading lows very successfully. I'm actually looking to close my profitable trade. Probably do it today, actually. It's Friday. Cash out, but buy the dip. Easy peasy. To check out Mac's a bit of a mess. In a range, wait for the breakout. Easy. Decision made. Do I need to do anything today? Well, we've got a breakout. We've got potential trend change. We're below the 200-period moving average. Sell the rally. Nothing needs doing today. Monster, it was buy range lows. Again, now it's sell the break of range lows. Now I've applied some corrective trade management. I'm already in a trade. So again, just to reinforce, they don't always work out. But I've got corrective trade management in place, which means that I'm now profiting from the downward movement. Should it continue down, I'm basically selling the breakout now. So I've changed from buy range lows. I'm now, with the way that I manage my trades, I'm now profiting should it move down. And we've got a breakout. MO, it's transitioned from trending to ranging, but nonetheless, it's still in that range, buy range lows, sell range highs. MRO, buy the break of range highs, easy peasy. MU, a little bit sloppy, a little bit messy. Technically, we're below the moving averages. We've got sell the rally in a downtrend. It's currently rallying back to the 20-period moving average. Not the best chart I've ever seen. Netflix we've already looked at. Buy the dip. We've had the breakouts. I think I can remove that line now. And we've got the range breakout. Buy the dip once, buy the dip twice. Got a lovely rally. And it's, again, it's profiting very nicely. You can see just with the colored shade, I actually sold premium on this just for reference rather than buy calls. It's a little bit rich in premium, so it'd just be rude not to be selling something. NLS, guess what? Sell the rally in a downtrend. It's just gone above its 50-period moving average. If it travels back below, then I can be a seller on this stock. OKE, just a few more stocks to go, folks. Guess what? Ranging, breakouts, buy the dip. Easy peasy. Easy peasy. Messy, PGR. Again, I think it's probably more important to recognize you've got multiple crossing the average price. There's no well-defined bound. Can everyone agree? There's no well-defined boundary high or boundary low. I'm just going to leave this alone. I'm looking for multiple touches of the highs, multiple touches of lows. We could certainly draw multiple levels. Let's not worry about it. Yeah, absolutely, Glenn. That's perfect. This is probably the most important chart today. This is one of the things that most new traders struggle with doing, and that's just to be able to recognize there's no trader. You've got the blueprints, which will make it easier, but if it's not obvious, don't force it. If it's not obvious, don't force it. So as you rightly said, Glenn, pass. Breakout pullback, buy the dip, PXD, looking good. We'll probably have a trade on or a new trade on this next week, coming back to the 20-period moving average, but it's the first pullback after the breakout. And again, we can move back to trend trading. Sketches, a little bit sloppy, a little bit messy, a little bit of a conflict. Prices below the 200-period moving average. The average prices are moving upwards. Again, conflict, leave it alone. SLG going sideways. We've got multiple crosses in the average price. Can we define the boundaries? Again, the boundaries aren't really too obvious. A little bit sloppy, a little bit messy. I'm just going to just contain it with the extreme boundary highs and lows. I'm not going to worry about it for the moment. I've missed one else. Yeah, absolutely, Glenn. Pass. Buy the dip. Buy the dip. SM Energy. SM Energy. Buy the dip. Looking good. SPR in a consolidation. So now we're looking at visual consolidation. Where is it? Again, don't worry about the pinpoints. Just contain price. That looks like where price is contained. Let's not worry about the exact penny. It's about 35 is the low, about 54 is the high. These days, I wouldn't worry about the exact pennies. Wouldn't worry about the exact pennies. The HB stands for, so question from Rodrigo, the HB stands for, it's just TradeStation's way of saying if you're going to short stock, they may be hard to borrow and you'll have to put a request in for them. So you won't automatically be able to, or you may not be able to automatically short the shares if you were looking to short stock. Typically with, as I use stock options, it's usually not a major concern because I'm not usually trading stock anyway, so no big deal. Sell the rally. STX, it's in a bit of a range. It's a little bit sloppy. It's a little bit messy. Multiple crosses in the average price. Again, I'm not going to worry about trend lines. I'm not going to worry about trend lines. I could draw a descending channel. I could make it a descending triangle type. I don't care. I don't care. It is in a range. STX. My apologies. STZ. Verbal typo. Messy consolidation. Nonetheless, we're all in agreement. It is in a consolidation. Let's not worry about where there's a trend line or if there's any slopes. Wherever possible, absolutely, it's in a range. So wherever possible, what I try and do is draw horizontal lines because there's no evolution of price, which is what we mentioned earlier. It's not going to evolve into a different name or a different shape because the trend line's at a different angle. I'm not worried about it. It is a horizontal range, and it's going to be 99% of the time, it's always going to be a horizontal range for me. It just takes the easy thing. Ironically, the next chart is the exception to the rule, unless it's obvious. Sometimes I will draw them. I felt this was a nice, clean example, but I just think it's kind of funny that I was just ragging on trend lines. And the next thing is a trade that we've placed using trend lines. Every now and again, when it's obvious, but if you notice though, it's at least 3 touch points, 1, 2, 3, and we've got multiple touch points right there. So you can use them. It's just, you don't want to get into the habit of using them every single time. It's usually not worth the efforts. What have we got? Tenneco. I've got a lovely consolidation here. I think we're waiting for earnings. We've just seen it wind up ahead of earnings. So I had some great trades on this year. TM. What have we got? Toyota Motors. This is very gappy and very spotty. It's got multiple listings on multiple exchanges. It's obviously a Asian stock, Toyota, and it's also listed on the US market. So it trades first and foremost on a different exchange, and then the US market catches up. Just in case you're wondering why it's very spotty, very gappy, it's just got multiple exchange listings. TSEM Tower Semiconductor, again, consolidation breakout. It looks like it's moving and transitioning into a new consolidation. A little bit of a pro tip, actually. If it's doing that, what I can do is just take a parallel line, because it looks like the breakout's not trending anymore. So what I'm doing is I've just taken the prior consolidation that we had identified, and maybe what we're seeing is what Nicholas Darvish wrote about, which is where prices will almost stair step and consolidates. So it's got this consolidation here. It looked like it's developing a new consolidation, but slightly higher up. So I'm just speculating on that. Again, this is for me what I call O&D analysis. O&D, I recognize something, and it's just a phenomenon that you sometimes will see. So that's all I was just pointing out there. Tyson in a range, wait for the breakouts. Again, we've traded from the range lows to the range highs and back up again. Tupperware, my apologies, not Tupperware, TTM in a range, buy range lows, and wallop. Thank you very much. TUP, Tupperware, it's been messy, it's been sloppy, it's been horrible. Leave it alone. Don't worry about it. Come back, just draw a big box around the mess and say, wait for the breakouts. UIS. Just a few more to go. I think it's fair to say we're all getting used to this now. It's in a consolidation. Mark off the range highs, the range lows. Don't worry about the specifics. Just recognize the phase. Where is pricing in the context of the range? It's in the middle. It's not at the range lows. It's not at the range highs. It's not doing something new. Come back tomorrow. VLO in a range. Wait for the break. Or sell range highs, buy range lows, etc. VTR. Guess what it's doing? It's in a little bit of a sloppy, messy range. Mark off the boundaries. Where's price in the context of our range? It's somewhere in the middle. Leave it alone. WCC, we've got a nice rising channel. Where's price? Now, here's the thing. So we were talking about this earlier. Sometimes we'll see price both trending and ranging. And this is what I meant. We've got a very clear upper and lower boundary. It is contained. So the way that I tend to treat this is acknowledge both things. It is going up. It is trending, but it's also contained in a rising channel. It's also ranging at the same time. So the way that I deal with this is I'm going to be a buyer at the range lows and a buyer above the range highs. So I'm not going to be a seller at the range highs or a seller of the range lows until we have a new confirmed trend change. So I get the best of both. I'll be a buyer at the range lows and a buyer of a break of the range high. So I'm just excluding 2 of the ranging choices that we have there, just to try and acknowledge that there's 2 things going on. It's trending and ranging. So I tend to default to the fact that it is ranging and look for ranging setups within the context of a rising trend. WM, buy the dip. I think we're all happy with this now. It's very clear. See how when it's obvious, it's obvious. This is what we'll look. Another example of when it's crystal clear what we should be doing. We should be doing it. Number 1, buy the dip. It's currently in rally mode. Wait for the retracements. WMB, guess what? It's crystal clear that it is going up. This is a statement. No one's in disagreements. Great. Now I know I'm going to wait for price to come back below the moving averages. And that's my Bible dip. It's currently in a rally mode. Wait for the dip. WW, this is Weight Watchers, messy, horrible chart. It's transitioned from ranging, breakout on some bad earnings, but essentially it's sell the rally. It is trending down, sell the rally in a new downtrend. And last one, WYNN, sell the rally in a downtrend, brand new early stage trend, waiting for it. So I've mistimed my entry slightly. You can, again, full transparency. They don't all work out, but I've got to follow the rules. If I wasn't already in a trade, I'd certainly be looking for a trade entry. Again, because I'm using stock options, I don't necessarily need to worry about where my stop loss is. I use the full price, the premium, to work out my risk. So I manage my risk on the entry, and it means I don't have to worry about, did I mistime the entry? I'm in a bearish trade. I'm happy with it. My viewpoint's not changed. If I wasn't already in a trade, I'd certainly be looking for one. That gives me confidence. I don't need to worry about it. If this was to go up and up and up and never come back, my risk is not going to get any worse because I've defined my risk on the entry with the price of the option. So it's a lot easier. It's a lot more stress-free. So there we go. We got through, what have we got? 250. We got through 75 stocks in about 30 minutes. It only took that long because I was fielding questions. I was explaining things as I went along. But I think it's fairly clear that we've got a simple process that allows us to, even if we have to do a bit manually, as we said last week, I'm not looking to do this on every stock, every day, all of the time. I'll do this manual inspection probably once a week. And I've done it with you today. I don't need to do this again until, sometime next week, 7 to 10 days. I've got a list of stocks which look interesting. As we've been doing this, I've been writing them down. So that's my short list. So tomorrow, in the next several days, all those stocks that we said, that looks interesting. That looks like a great trade. Those 4 or 5 stocks that we said, something interesting is happening now. I'm going to check in later on them. I'm going to come back on Monday and say, is my entry today? So now it's a case of, again, just coming back to our production line. There we go. So when we come back to this, what we've done is we've mainly focused on the visual confirmation. What is price doing? And then we ended up with a short list of, let's just say that we found, 7 stocks that were interesting. I can take those to the next step, the trade craft, and look for my entries, my exits, my stops and targets. And you've got a good idea of what I'm looking for. But I've got a checklist as well of what the things I'm looking for to help me identify what I'm going to do when I'm going to do it. Just because price is dipping in an uptrend, for example, it doesn't make it an automatic buy. I've got conditional triggers that go into today's today. So that's what I'm going to be looking for on those several stocks. There is a conditional trigger. So when that's met, the trade will go on. It's not a case of we've done all the hard work. We're just waiting for our moment to go into the stock. So that's the trade craft. So that's the bit that happens next. But although we went through 75 stocks today, for the next 10 days, I only really need to look at 7 stocks. So we spent 30 minutes today doing the visual inspection on a universe of stocks. And again, 75 stocks. So we went through a universe of stocks, a small, manageable, bite-sized list, visual inspection. Really lost my train of thought here. We're looking for 6 money-making blueprints. We found 7 stocks that we thought, actually, this could be today. It could be later. It could be in the next few days. Looks good. I'm going to check into those Monday, Tuesday, Wednesday, Thursday, Friday. I only need to look at 7 stocks all of next week. Is it today is what I'll be asking myself. Is it today? Yes or no? If no, come back tomorrow. If yes, place the trade. Is it today? If no, come back on Tuesday. Guess what I'm going to do on Tuesday? Check the trades. If I find a trade on Monday, one of the entry criteria is met, I've only got 6 stocks to look at for the rest of the week. So I'm not looking at every stock every day, all of the time. I'm just focusing on the best stocks, the best opportunities, the things that I need to take my attention right now. And it all starts with having a production line. First of all and foremost, like knowing what you're looking for, like what am I looking for? And then I'm going to look for stocks that meet that criteria. It all starts with those 6 money-making blueprints. Essentially, what is the trend? And this means that we're not flicking through chart after chart like a mindless zombie, wondering if the next chart is the one. Anyway, thank you for spending some time with me today. What was your biggest takeaway? Leave a comment, let me know. But what was your biggest takeaway today? Which is code for I'm going to have a quick slurp of my tea. Awesome, Peter. Thank you very much for your kind words. Randall, of course, stick to the plan. Stick to the plan. So what was your biggest takeaway? Again, Steve, thank you very much. I'm just popping some of these on here. So Steve, yeah, entries on channels. Good session. Thank you very much, Steve. So what was your takeaway? What was your take? Oops. What was your takeaway? What was the thing that you had a little aha? Is there anything interesting going on? Obviously, we've got Peter, sticks to the plan. Steve was also saying that the entries on the channels a little bit different. I mean, just because we see, just got again the thing that's I suppose resonates. So Ezekiel, I see you've just pretty much picked up on the thing I was just about to say. So Zeke is saying, be patient. The process is proven to work. Yeah, I think that's one of the harder things. There's several things that kind of all combine to be hard for new traders, and it's patience. We know the process works, and the fastest way to get success in trading in the markets is to actually slow down. And it seems counterintuitive, but we've got one of the weirdest career choices in the world, in that we get paid to wait. We get paid to wait. And if you've been following these sessions for any length of time, you'll know from about the 15th of September, we were waiting for a sell-off. And we're waiting for that correction to happen. But something new started to look a little bit different compared to the sell-offs of the rest of the year. And that forced us to wait and be patient. And for several weeks, it was wait for it, wait for it, wait for it. And, you know, if you've been coming to these weekly sessions, we've been talking about it. Wait for it, wait for it. And then last week it was go, go, go. So we had to wait a month. And in the big grand scheme of things, it's not that long. It's not that hard. But this is what the textbooks don't tell you. This is what the back testing a strategy doesn't give you. It's when you're living through it in the moments, you don't really appreciate that patience is where we make all our money. Awesome. Thank you very much for your kind words, Ezekiel. I'm really pleased that you got a lot out of the session. Again, some more kind words. Again, thank you very much. So, good place to sign off. Thank you for your time, for your attention. I know I say this every week, and I do genuinely mean it, and to the point where I want to include it every week. I fully appreciate we could all be doing other things with our day, with our time. We could be with loved ones. We could do other things. We might even be skipping work a little bit. But whatever the reason is you're here, thank you from the bottom of my heart for giving me the most precious thing that you can give me, which is your time and attention. So thank you for that. If you got any value from today's session, all that I ask is that you share the replay with two people who need to see it. And more importantly, take action, put into action what you've learned, all those ahas that you've had, go in, do them. That's all I would ask for anyone. If you do need some extra time, some extra attention, if you want to know the specifics of what I do rather than just the surface level overview, as I promised you earlier, you can work with me. I have a wonderful group of people that I'm working with in a group accelerator. I occasionally do one-on-one mentorship. And there is a waiting list for that at the moment. As you can appreciate, my time is limited and I like to enjoy my free time as well. So I only work with one or two people at any one time. And again, there will be a waiting list. So if you want to take a look at what I do, there's some extra details. You can go to my main website at AntiVestor.com, or if you're watching this and you can't figure out how to spell it, just go to productionlinetrading.com and that will redirect you. So AntiVestor. AntiVestor.com. That'll take you to the main webpage. Just follow the instructions and you'll be able to learn a little bit more about what we're doing. Again, the group accelerator is absolutely wonderful fun. It's awesome to see everyone's growth, everyone's speed. how well they're trading. Most people are on the live account now after just a few weeks of the last intake, which is absolutely awesome. And it was all because I had this little epiphany of the best way to learn how a portfolio is being managed is to actually see how it's being done. So, twice a week, you get to look over my shoulder, look at the entries, the exits, the stops targeted, to ask questions. We're on the phone together. It's a two-way process, not just one way like today, where it's pretty much just me talking. So if you'd like to learn a little bit more about it, then let me know. I am looking for 2 or 3 motivated people who want to get results. Again, in the group environments, we have some spaces for those. And again, you'll learn more about the mechanical scan, the visual confirmation in more details. Most importantly, the tradecraft, the entries, the exits, the stops, the targets, the money management. I've got software that you can use to help assistant. We've got trade assistants. You'll also get access to what I'm trading, posting my results on a tracking spreadsheet so that you can follow along if you want to while you're learning along the road. If you are interested, the next steps are simply go to my website, AntiVestor.com, or if you can't type that down, just go to productionlinetrading.com. That will redirect you. It's just a more memorable website. Oops, pressing the wrong buttons. And if you want to talk around, I will stay around for the next 5 or 10 minutes if you've got some questions. And Randall is very kindly, Randall, you're the best. He's my champion at the moment. Thank you very much. Randall's very kindly saying it's a great program. He can attest. So thank you very much for your kind words, Randall. So thank you once again for spending your time, your attention with me today. Whatever you're up to, make sure that you're doing something fun. I know I will be later. I'm going to be cashing out some profits. And as I usually say, maybe there's ice cream involved. There's actually a party involved for me later. So make sure whatever you're up to this weekend, have a great time. And as Randall's just said, yeah, have a flamingo weekend. So it's party time tonight. I should be dancing and prancing like a flamingo, Randall, later today, just in your honor. So with that said, enjoy the rest of your day. Have a wonderful weekend. And I'll see you at the same time, same place next Friday.